Good morning, everybody. This is the Live Market Open for Thursday, January 14th. I'm Yohay Elam, Forex Crunch and Market Movers, doing the show as usual for FX Street. Okay, so as usual, we'll talk about recent developments, lots of risk on, risk off, and those kind of things. Charts and levels, we had some developments the next 24 hours, and of course, your questions. I see lots of you already on the chat. If you cannot see the chat box alongside the video, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. Okay. What did we have yesterday? We had mostly bad news, which is not new, which is something that accompanies us for quite some time. So industrial output in the Eurozone missed with a drop of 0.7. It didn't do much to stop the euro. The euro still moves on safe haven flows. Good news in the world is bad for the euro and the other way around. Okay, the big story yesterday for markets in general was that crude oil inventories, they did rise less than expected, but the distillates, the refined oil, the petrol ready for use, actually went up once again. And markets actually, as I see it, they try to find every kind of, they sort of look at the half empty glass. They want to see more bad news. So the big headlines that screamed yesterday were that Brent oil fell, Brent oil, let's see the chart, fell under $30 for the first time in 12 years. Here we focus more on WTI crude oil, and as you can see, we didn't have a drop yesterday under 30. We had a drop earlier this week, but the price is still low, $30.79 at the moment, a bit higher than earlier levels, but the trend is clear. We're still down. It's still negative. Another piece of news that came out yesterday regarding oil was that shale production in the United States is about to fall. We haven't seen that yet. I'll remain skeptical. I'll believe it when I see it. But anyway, this led to a drop in the stock market also in the United States. This is the S&P, and led to a renewed risk off atmosphere, risk aversion. Yesterday in the morning show, we talked about correction, and it was over. Now, the mood changes all the time, but I'll begin from yesterday. So yesterday we had initially some kind of better mood in markets. So we've seen euro-dollar slide towards 108. But when the mood turned sour once again, we had a rise. I put this new line here at 109, formerly 108.80. Anyway, this morning we're seeing, once again, like yesterday morning, some kind of more optimism, some kind of more risk on, but it's still limited. The mood, as I see it, could sour once again. Okay. What else did we have yesterday? Of course, crude oil had a lot of impact, as it always does usually. Another thing that happened is the US Beige Book. This is a report by the Fed released 2 weeks before the rate decision. Remember, we have a rate decision in the United States at the end of the month. On January 27th, no change in policy is expected. This is a rate decision without a press conference. Just a second. But it's a report about the US economy. And this report showed that more regions, there are 12 regions, 50 states in the United States, but according to the Fed has a division to 12 regions. And it showed more of a slowdown, okay? Things are getting worse in the United States, not an outright recession, as some doomsayers already say, but according to the Fed, more modest growth and moderate growth, and only one region showing upbeat growth, one region showing flat growth. So nobody's in a recession, but less moderate and more modest, okay? So these nuances between these two words make a difference. More regions are now in the modest camp and not in the moderate camp, okay? So this didn't have an immediate impact on currencies, but it had also an impact on the mood in markets, okay? So let's look at, if we talked about the mood, the one that moves, the currency that moves according to the mood is the yen more than the euro. So yesterday we had, during the show, we talked about the pair climbing higher, moving above 118. Actually, we're above 118 once again, but what we had yesterday is another fall here. Actually, we found support a bit lower. Maybe we'll change this line to 117.30. We found support here when the mood became worse. Now we have somewhat better mood in markets. We had stability during the night in China. Chinese yuan was almost unchanged. Chinese stock markets actually went up. Of course, there's lots of intervention by the People's Bank of China, by the Chinese authorities in general. This didn't stop other markets from falling, like the one in Tokyo, the Nikkei fell. And for instance, well, we had bad news during the night from Indonesia, from Jakarta. There's some kind of attack. I think it's still going on. And that, of course, had an impact not only on the Indonesian market, but also on other markets. But in general, we're seeing some kind of an improvement in the mood. Dollar yen is moving up, the yen is moving down. Same with the euro. Euro is weaker. But remember, this is sort of a correction within a general gloomy mood. We had more articles coming out yesterday talking about perfect storm for 2016, warnings from various economists, analysts, billionaires. So this is yet another morning of correction within a gloomy mood. Okay, let's move to another event we had yesterday. It's well, actually tonight we had Australian jobs data. It beat expectations. So Australia lost only 1,000 jobs. Let's look at the numbers here. Yeah. So this is the third beat in a row. Australia lost only 1,000 jobs. It was expected to lose around 12,000. And last month it was actually revised higher to 75,000 jobs gained. And also the division between full-time and part-time unemployment is positive. More full-time jobs gained, less part-time, and part-time jobs were lost. Unemployment rate fell a bit, but it was also countered by a drop in the participation rate. Anyway, the Australian economy is not only about China, and it shows some signs of strength. So for the Australian dollar, we had some kind of a recovery that began before. That sort of is supported by strength of the Australian economy more than the mood in markets. But again, the mood in markets has a bigger impact. And of course, Australia is impacted by China more than any other country, more than any other currency. So if worries about China persist despite the stability in the yuan, despite the stability in stock markets. Okay, 70 remains a battle line. It's not really strong resistance, I would say, anymore. Australian dollar became a bit more choppy. I still see 69.40 some kind of support because it worked as a double bottom, but let's see, it's been shattered a bit, so I'm not sure it can hold. Anyway, 69 is further support down the line. Okay. Let's talk about the British pound. British pound did find some stability yesterday. Remember, we had the terrible manufacturing data there on Tuesday, and it sent the pound down against the euro, against the yen, against the dollar. It made some kind of recovery from the lows yesterday, at least some stability, but now it's trading water, looking for a new direction. Of course, today the big event of the day is the rate decision in the UK. Okay, talk about that. Let's talk about that now. Yeah, talked about everything here. Yeah, so this is actually the first event for the morning, which is at 12 GMT, 1 o'clock here in the old continent. So in the UK, we have this situation in which we had relatively strong growth for quite some time, good GDP growth, lots of jobs gained, wages rising up to a pace of 3%, positive PMIs. It began only with construction, but then expanded to services, and also manufacturing looked okay. But in recent months, we've seen a few negative signs. We've seen wages, perhaps the most important thing, because wages drive core inflation. So wages got stuck. I mean, they flattened, as the Bank of England said. They were at 3% and now only 2.4%. Still not too shabby, still similar levels to the United States. Well, maybe that's not the best comparison. Anyway, it's not as optimistic as it used to be. Inflation was low for a long time. Of course, it's related to oil prices, but also core inflation is sort of not going anywhere fast, around 1%. And PMIs, of course, manufacturing is poor like everywhere in the world. I mean, everywhere in the developed world, at least. Also in China, also in the United States, also in the Eurozone. Services remained relatively stable, but messages that we've received from the central bank, they all say that they show more worries, okay? Now, a few months ago, the central bank seemed closer to a rate hike. Mark Carney said that towards the turn of the year, which is just now, we've just turned the page 2 weeks ago on 2015 and we're in 2016. Mark Carney, the governor of the Bank of England, Canadian governor of the Bank of England, said that around the turn of the year, it'll be a good time to not to decide about a rate hike, but to reconsider it. But since then, things have soured. As I said, what's interesting in this rate decision is not the decision itself, because nobody is expecting a change. Actually, the last time the Bank of England changed rates was back in 2009. Okay, that's almost 7 years. It was March 2009. But what's important, what the big change that we had from the BOE in the recent releases is that we get at the same time the meeting minutes. There are two parts to this release. The first part, the first reaction in markets comes from the voting pattern. We have the Monetary Policy Committee. It's a committee of 9 members, most of them from the Bank of England, some of them external. They vote, okay? Each one has an equal vote, including Governor Carney. These 9 members, out of these 9, one member in the past 4 months or so, Ian McCafferty, he voted for raising the rates from 0.5% to 0.75, okay? But he was alone all the time. He argued that inflation is about to rise, that the economy is doing well, more jobs, inflation will eventually come, that they need to be ahead of the curve, like the Fed, okay? But he didn't convince, of course, all his colleagues. Some of them, like Andy Haldane, hope I'm not butchering his name, is more dovish, and most of them just are in a wait-and-see mode, okay? I thought for a very, 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 very long time that they were waiting for the Fed. I think that was partially true, but no, the Fed did react. So in theory, the Bank of England should act soon. The Fed made the first move, but after the recent sort of souring in UK figures, I suspect that we will not have a rate hike anytime soon. Of course, not today, not in March, not in May. It'll take quite some time. There's also a political issue of the referendum, EU in-out referendum, which is expected in the summer or in September. Well, that also could be considered summer. And we have this political uncertainty, and the Bank of England will not want to be seen as getting into this mix. Anyway, the first reaction today at 1 local time here in Barcelona, 12 GMT, 12 in the UK, is the voting pattern. If we still have 8 members voting for a rate hike, for no change, and 1 Ian McCafferty still voting for a hike, it could be a bit supportive for the pound, because despite all the bad news, we still have someone voting for a rate hike, okay? But if we have Ian McCafferty aligning with his colleagues voting for no change, it of course is bad for the pound across the board. Now, afterwards, we'll begin getting the headlines from the meeting minutes themselves. So it's also more verbatim of how they see inflation, how they see the economy, how they see growth. Currently, expectations stand on a rate hike only in 2017. Let's see if it'll be more dovish or more hawkish. I expect them to remain not extremely dovish, okay? I don't think they'll join the global gloom. But who knows? The Chancellor of the Exchequer, George Osborne, said that the UK is facing a cocktail of threats. Okay, we had other people warning. Of course, it's always easy to blame China. So we also could have this scenario in which the Bank of England joins analysts in the City of London saying that things are about to get worse. Okay, so regarding market expectations, I think that it's sort of in the middle. If we have dovish scenario, it's going to be bad for the pound. If we have a hawkish one, it's going to be good for the pound. I mean, some are expecting toning down a more dovish stance, but it depends how dovish it'll be. And the pound is vulnerable, so I don't have a clear scenario on what's the exact path, but in general, I think the pound now is showing us some tension, and that it's waiting for the decision. Okay, pound dollar, but also other currency pairs. Okay, see here some questions. Well, good morning, everybody. Fabian, Josh, Jax, JM. To buy euro, so, and the question here, buy or sell Aussie dollar. Well, I don't give specific or euro dollar. I don't provide clear, real signals, if you wish. That's not the place, but I would say that the mood in markets is still gloomy. That means it's bad for the Australian dollar and good for the euro. Currently, we're seeing some kind of, this morning a stronger, weaker euro, and a stronger Aussie, some kind of more risk-on atmosphere, but I'm not sure this will last. Okay. A question from Ryan. I was chatting to my broker and he mentioned that when a currency crosses the 200 SMA, there's usually a large move to that direction due to big banks placing pending orders there. 200 SMA is really close to our hourly candle on dollar yen. Could this be a signal for a long trade? Is there any substance to what my broker said? Well, there is substance to what your broker said. That's because many banks do place their orders according to technical analysis, and they often use the same lines. So there is, of course, a concentration of orders there, of stop loss orders there, limit orders, all these kind of things. So, of course, there is some logic there to what he said, but it's also movements in markets also depend on fundamentals. So a long trade in dollar yen, this requires an improvement in the mood more than anything else. Secondly, more determination from the Fed to act. And what we heard, very initial signs from the Bank of Japan that they're also ready to act. Okay, not so fast, but the Bank of Japan doesn't like the fact that China is devaluing the yuan. It's a big rival. China is the second largest economy in the world. Japan is the third. So they might want to act to weaken their currency, but I'm not sure. With all this gloomy mood, there's still money repatriated to the safe haven yen. So I think it's still choppy waters. Yeah. It does have substance, but it's not the only factor to watch. Another question, trend is when banks' interest rates hiked is good for the currency, but for the pound, a rate hike might not do what we expect because of the unknown. Grexit, yeah, in this case, it's more Brexit. So, of course, central banks have the most impact on currencies, but of course, also politics has an impact. So, if we have an opinion poll showing that more people want to leave the EU and in the UK, then it's of course negative for the pound, because markets want uncertainty and markets want more trade with the EU. So of course political events have an impact as well. Indicators, everything. Okay. Another question. So what price do you think central bank will draw a line in the sand and start lowering their currency exchange rate back to 123? I think the line in the sand for the Bank of Japan is 115. We've seen that in the past. That was the line back in August, and we've heard them talk more about the strength of the currency. Yeah, I think you can see that here. Well, we've been a bit above We've been at 116 back here in August, right? Yeah. Let me check that out. We've been at 116 in August, but I would say 115 is sort of a more round number. We've been at 115 in back at December 2014. I would say a round number is more important for them. I'm not sure they'll strengthen it all the way to 123. I think they don't want an extremely weak yen, okay? It also has a negative impact, especially if they import lots of energy. Now energy is weak, now oil is weak, but this will not necessarily last forever. I think they're comfortable with dollar yen hugging 120, and also the current levels of 118. It's not too bad, okay? So I think we'll hear them talk a bit more loudly at 115. But so that's what I would say. Jobs data in Australia, I think it's good for the Aussie because it came out better than expected, a smaller loss of jobs and a lower unemployment rate. But remember that it's not the only factor. China is Australia's #1 trade partner. That has an impact as well. Okay, pound, the queen will do what it takes to keep her face on the pound. There's absolutely no chance that in the next few years the UK will join the euro. The question is, will they stay in the European Union with all the agreements regarding migration, regarding the single market, which is important for businesses, regarding free movement of people, regarding job regulation, everything. So that's the big question now. Okay, you said that, Fabian, you said that Ian McCafferty will join the other voting members. Dovish vote would be bearish for pound, yeah. And if he will be hawkish, even alone, that could be bullish. That's I don't have a clear answer. I think that markets do expect some shift to the dovish side, if you wish, from let's look at the pound again, currently 144, very stable at this level. I think markets are expecting some kind of dovish shift from the Bank of England, but I'm not sure it's fully priced in. So if he does stay voting, let's say if he does continue voting for a hike, and the meeting minutes are more dovish than last time, more worries about, let's say, echoing what Osborne said about a cocktail of threats. All right. So in this case, we could have we could see the pound weakening despite him voting for a rate hike. Okay. So I think maybe the immediate reaction would be stronger pound, but if the wording, if the members see, if they're more worried, and they can be more worried with this beginning of 2016, which doesn't look good at all, then I think it can overwhelm one vote. Okay, but if we have McCafferty voting with the majority, the unanimous majority, 9-0 against the move, that could have an immediate dovish impact. Okay, of course, this can always be balanced by a more hawkish stance by the meeting minutes, but I don't see that. I see more a better chance that everybody moves to the dovish side. Okay, let's talk about more events for today. All right, at 12:30 GMT, half an hour after the rate decision and the meeting minutes from the Bank of England, we have the meeting minutes from the ECB, the European Central Bank. Now, this is published so late in the game that it's almost meaningless, okay? So we had a very, very dramatic decision on December 3rd. The ECB decided to cut the interest rate, the negative rate, to minus 0.30 after minus 0.20. They decided to extend the QE program from September 2016, September this year, to March 2017. And also they decided to reinvest proceeds. That means for every bond that matures, they buy another bond at the same size, maintaining a high level of their balance sheet. And according to calculations by Draghi and his colleagues, both moves, extending and reinvesting, they're worth a total of 680 billion euros. That's a lot, okay? But markets were disappointed because they expected a bigger cut in the interest rate and higher QE monthly buy from 60 billion every month to 70 or 80 billion. And that was a very dramatic day in which euro dollar, let's show it to you, euro dollar jumped from 105.20, that was the bottom, to 109.80. It's a very clear line here on the daily chart. That's the biggest move, I think, since 2009. And now we have the meeting minutes from that decision. We know that some members limited Draghi. They wanted less action. We also know there was a big debate there. And we want to know, we'll know from the minutes how bad the economy is, or the economy is showing some signs of improvement, but how bad inflation is, inflation expectations, everything. But the Fed releases meeting minutes 2-3 weeks after the decision. It always has a big impact. The Bank of England now releases meeting minutes immediately. The ECB waits 5 or 6 weeks before releasing it. We have an ECB meeting next week. So the news from early December is a bit stale, is a bit old. I don't think it'll have a big impact. Of course, if we have lots of huge worries from the ECB and some hints that they're ready to act already in January, it'll have a negative impact on the euro. But how could they know already in December that they're ready to act in January? Anyway, I see a minimal impact. I mean, that's what we had last time as well. Maybe this time will be different, so it's important to watch out if you're trading the euro. But I come to these meeting minutes with interest, but with low expectations that we'll have something real. The comment here, Europe needs the UK. Germany hates the fact that London is the best time zone to access all the markets. Unless Europe moves and sinks time to match GMT. Yeah, it's also time zone thing is more an impact here on Spain, but ECB minutes probably passed to select people before the release. Yeah, we had lots of leaks also from the ECB. We had, of course, quite a few speeches since that December decision and until today. So that's why I think the minutes are old. Speeches by members from the ECB, like we had this week, are fresh news and they relate to fresh data. The minutes are likely to express concerns regarding the low inflation, says Fabian, and readiness to do more. However, both things are well known to the market. Yeah, what impact? Yeah, so the answer to your question is, well, first of all, I agree with what you said. And secondly, I expect a minimal impact. Euro-dollar moves a lot more because of, thanks to these safe haven flows, or then times of correction, more than ECB. Of course, when we have the ECB meeting next week, it'll be dramatic, but the minutes are stale and not that important. Okay. What are your thoughts on Swiss news at 10:30? Probably ignored it because I'll explain why I ignore it. Well, I don't see any Swiss news, so if you can enlighten me, then I don't see anything Swiss related, but let me, maybe I excluded it in the filter. So no, I have here Swiss events. So which event are you referring to? I don't have it on the chart for today. The Swedish. Well, I must say I'm not following Sweden, so I would say that what's going on in Sweden does have an effect on the Eurozone, because Sweden had a negative interest rate before the Eurozone, and of course it's also a member of the European Union. But I must say I don't follow the Swedish krone closely. Yeah, we have that's right. We should have it any minute now. The Swedish CPI. So of course that can have an impact on the Swedish krone, but I don't follow that closely. Recent commentary from the ECB members that low rates could trigger bubbles has been somewhat hawkish. What do you think? Yeah, that's somewhat hawkish because if they worry about bubbles, they will not act more. But I would say that's a minority. Some worry about bubbles, which is true, of course. They can't create bubbles. We've seen bubbles in the past, but here specifically in Spain. But they're the minority, I think. The majority, including President Draghi, I think they see a situation where there's a danger of deflation if prices fall too much. The ECB must act to change this deflationary mindset to avoid a situation where markets believe that low prices are here to stay. And when people think that low prices are here to stay, they buy less because they expect prices to fall. And then factories produce less and they fire workers. And when they fire workers, these workers have less money in their pockets and they buy less. So this kind of vicious cycle is something that the ECB fears, something that happened in Japan, something they don't want to see, okay? And those are most members. And contrary to the United States, where they see the low oil prices as having a transitory effect, a temporary effect, in the Eurozone, they see it as having a more significant effect that could reach core inflation and could stick, okay? Why is that? The general economic situation is just worse. So for Americans that have more jobs, it just means more money in their pockets, the low oil prices. For Europeans, the low oil prices reach all other prices and could have an impact. That's sort of a short explanation. Yeah, so there are 23 members, if I'm not mistaken, in the governing council of the ECB. There are more of them there are more doves now. They're in hawks. Of course, the hawks are vocal, and the hawks come from the biggest country, from Germany. But if the hawks would be in control, had the hawks been in control, we wouldn't have seen this kind of policy, negative deposit rate, 3 cuts, QE program, and the ECB now has turned from one of the more hawkish central banks to one of the more dovish ones, okay? And the question, when will the first next big market mover for euro-dollar to get out of this consolidation? Well, I think we'll have to wait another week for the ECB, unless we have some kind of dramatic events in markets. So, yeah, maybe we'll have some moves. Yeah, it's very frustrating what's going on with euro-dollar in recent weeks. But the ranges are just becoming tighter. Of course, a big crash in stock markets could send euro-dollar higher. Comments about action from the ECB can send it lower. But a big market mover could be the ECB. And of course also the Fed, but yeah. Yeah, good morning, Sinatra. Yeah, hawkish in Germany. There is a bad experience with high inflation in Germany from the Weimar Republic. And in Germany in general, the mentality, correct me if I'm wrong, is that if you want to buy something, you should save money and then buy it and not take a loan. This is a very, very big generalization and a stereotype, but and many here in Spain, for example, before the crisis, now it's different. People took 100% mortgage on their house and things like that. And we didn't see such extreme bubbles in Germany. The bad thing, of course, is if people don't take risks and don't take credit, is that Germany used to be the sick man of Europe in the mid-2000s. So finding the right balance of risk, of credit, is always hard. And we could talk, of course, hours about that. Maybe we'll dedicate a show to that. But anyway, yeah, tendency in Germany is to fear inflation more than in other places. How much pound dollar can go lower? Okay, I see a line in pound dollar at 142. It used to be a support line in the past. So if we have a double dovish, let's call it this way, from the UK today, if we have a double dovish of 8-9 members voting against the hike and dovish meeting minutes, 142 is the low seen here in 2010. So that's the next low. Okay, it's also, well, sort of round number. 140 is, of course, an even more round number. And then we have the post-crisis low of, let me rearrange the chart just a second. We have the post-crisis low of 135 back in 2009. That's sort of the line in the sand, but that's still very far. Okay, but for today's reaction, I would say 142 is a stretch. But note that the pound fell quite a lot, especially in the past. Look, it's 3 months of falls in a row. So it might be a bit oversold, and we might have this kind of perhaps buy the rumor, sell the fact reaction, or some kind of, if it isn't extremely dovish, it could serve as an opportunity for short covering. So I'm not sure. 142 is also, in my opinion, only 200 pips away, but it's a hard 200 pips to achieve. Okay. Another comment from Sinatra: it will not be the aftermath of Bayram. Yeah, I hope. Yeah, I think general democracy in the in Europe in general is much stronger now than in the first half of the 20th century. When people here also in Spain talk about the time of the dictatorship, which is relatively far away, 40 years ago, still people have bad memories, or their parents have bad memories, but they have, to most people, the democracy seems very stable despite financial crisis, now political stalemate. Yeah, even rich Germans don't own homes but rent. Okay. Compared to the UK, when you receive all the support, yeah, it's easier to take loans in the UK, in Spain, in the United States. Okay. Let's talk about a few more charts before getting to the wrap up. I think we talked about Euro, Pound, Yen, CAD, Aussie, Kiwi. Kiwi yesterday suffered a lot, fell under the 65 line, found new support at 64.65. Now it made some kind of recovery, but it's finding it hard to recapture 65. Nothing going on in New Zealand this week. It's all about this risk-off mood, the falling oil prices, worries about China, doom and gloom hurt the Kiwi. Remember, not all is bad in New Zealand. Of course, the RBNZ wants a weaker Kiwi, but it's mostly a reaction to the global mood. Dollar Swiss above parity, mostly driven by the Swiss National Bank. Remember, the Swiss National Bank said that the franc should weaken, and of course they refer to the euro most against anything else. And indeed, yeah, so after a long time of hardly talking about this pair, 109.60, I believe there has been some intervention here by the Swiss National Bank, because we're now out of the previous range. Okay, we're at the highest level seen since October. Okay, so that's a 3-month high for Euro Swiss. I believe there was some intervention because the Swiss is a safe haven. The Swiss National Bank also said that there should not be safe haven flows to the Swiss franc. I believe they've been intervening just a bit, perhaps to mitigate some kind of dovish wording from the ECB next week. Okay. Euro pound reached new highs, relatively stable euro and a weaker pound, 75.50 at the moment. The high seen so far, 75.70. It's today, of course, bigger focus on the pound than on the euro. Also here we're at the highest levels, not in a year, but in quite some time. Highest levels since, almost a year since February. So I would say the next line for euro pound is 75.86 more or less, and then further, I wouldn't say this is relevant anymore, but 77.40 I would say is the next line. Let's see if the Bank of England goes extremely dovish, or perhaps we'll have a short covering. Okay, Euro Yen 128.36, relatively stable. This safe haven pair found its balance between 127 and 129. Pound yen, yesterday dipped to even lower ground under 169. Currently, it's hugging 170, exactly 170 as we speak. More movements today in the pound regarding this pair. I see more questions. SMA 50, 120, all lowering in Kiwi dollar. Okay, thanks. Also on H1 and H4. Yeah, also on 1 hour and 4 hour. Yeah, the Kiwi fundamentals regarding the Kiwi are more positive than technicals, but the Kiwi is getting carried away because of what's going on in China and the general gloom. Talking about gloom, the dollar against the South African rand. South African rand had a crash early in the week. This is, of course, an important emerging market. It's the S in the BRICS. Originally, we had. Why can't I get this chart? Sorry, I'll try to resolve this. Okay, we have it here. Yeah, so look at this move here early in the week. Boom, it shot up to 1780. Now we're, of course, back to a more stable range in comparison to this move. But if we look at the wider scheme of things, the falling commodity prices is killing the South African rand because it depends a lot on the commodities. Africa's richest country held a successful World Cup tournament a year and a half ago. They were on the rise, but the current crash in commodities, capital outflow out of emerging markets is hitting this country. Okay. Another question. What will move euro dollar today except the risk on, risk off mood? Any reason why it's going up at the moment? It's going up at the moment because I believe we're seeing a resumption of the negative mood. Let's see if we have a similar thing in the past hour or so. We're seeing dollar yen moving down and euro dollar moving up. Very clear correlation. Both are safe haven currencies. The mood is worsening once again. These are not extreme moves, but after we had some very small correction in the earlier hours, we're seeing a resumption of this negative mood. What else can move euro dollar? Of course, the ECB meeting minutes. My expectations are low, but you never know what can move that. I think that opening of the US stock market can have more impact than the ECB meeting minutes. Another question, is the commodity crash possibly a strategy to counteract the BRICS countries? No, I don't think it's a strategy. I think it's just there have been mining. Too many mining projects came online. And it takes time for a project to come online, and now we have oversupply in commodities. On the other hand, we have less Chinese demand, less demand in general than was expected. So there's, like in oil, too much supply, not enough demand, basic laws of economics, and falling down. Bad news this morning from Jakarta. Thanks for giving us an update. 4 dead, 1 cop, 14 gunmen, suicide bombers involved, ISIS suspected. Bad news from the capital of Indonesia this morning. This has had an impact, negative impact, of course. Also a negative impact on markets, especially in Indonesia, but also on the Japanese stock market, on the Korean one. So it's Yeah, unfortunately, this of course adds to the bad news, the tensions between Iran and Saudi Arabia, the suspected bomb from North Korea. All this also adds to bad news, supports the yen, supports the euro, and hurts risk currencies. Hopefully, this event will end soon with as few people hurt as possible. Okay, it's time to get to the wrap up for today. So this is the wrap up for the live market open, January 14th. We have a resumption of the bad mood in the markets. One of the reasons is just too much oil. We had Brent crude falling below 30, and that triggered bad headlines. And this morning, unfortunately, sad news from Jakarta with a terror attack over there. Still ongoing event as far as I know, but it's mostly for financial markets. Worries about China, too much supply of oil, not enough demand. Iran is expected to come back online. That also has an impact. Also worrying news from the Beige Book also had sort of a small impact, that more districts in the United States, Fed districts, are growing at a modest pace rather than moderate. Okay, we did have some good news from Australia with jobs data coming out better than expected, the third beat in a row. We did have stability in the yuan and in the Chinese stock markets, but it wasn't shared by other stock markets. So during the show, we're seeing a resumption of this strength of safe haven currencies. Euro dollar is moving higher again towards 109. The range now is between the round numbers of 108 and 109. Resistance 109.50, 110. Support 107.10. Dollar yen now weakening after support at 117.30, resistance 118.20, but in general, the pair looks a bit lower. There are some worries from the Bank of Japan about the strength of the yen, but they're still relatively muted. Big event for today is the rate decision in the UK. The pound is relatively stable around 144, looking for a new direction, looking for hints from the Bank of England. First, watch the voting pattern. If it remains 8 against 1 still voting for a rate hike, it's positive for the pound. If we have a unanimous vote for change, then it's negative for the pound. But then, of course, the meeting minutes themselves, the text, if they see weaker inflation, a slowdown in the economy, it's bad. If they still see in the glass half full, it's positive. Of course, their expectations lean to the downside given the current atmosphere. Dollar CAD, we didn't talk about that, reaching for the sky. Of course, another fall in oil prices yesterday. I think that the Canadian dollar was relatively stable in earlier this week, but now it's falling in a sharper manner, reacting better to the fall in oil prices once again. We got close to 144. 143.10 is some kind of support there. It was previous resistance, 142 further support. Some banks are talking about 145 for dollar CAD. Aussie dollar, despite the better news, is still depressed. The doom and gloom have more impact than the good news from the Australian economy. Let's see if we have a decisive break above 69.40, which was support in the past, further support at 69. Kiwi dollar also being carried away by the doom and gloom, 64.80, current level 65 resistance, 64.65 I would say support, and we can have, of course, further fall depending on the mood. Okay, before we head off, more events for today. Biggest event, the UK rate decision. ECB meeting minutes are very stale. It's minutes from the very important decision, but from December 3rd, many weeks ago. We have the regular US jobless claims at 1:30, and import prices. Usually, they don't have such a big impact. Let's just take a quick look at expectations of jobless claims, expected to remain mostly unchanged from 277 to 275. And import prices month over month to fall 1.4. Of course, a lot is related to oil prices. At the same time, James Bullard of the Fed talks. This time he's a voting member. He's a hawk. He's bullish bullard. Let's see if he remains hawkish, given the current fall in oil, in not only in oil, but also in stock markets. He's very, very sensitive to stock markets. If he becomes scared, then of course it's bad for, it lowers the expectations for a rate hike, but he's usually quite hawkish, okay? If he remains hawkish, it's no news. If he becomes dovish, it is news, okay? We have to see a change in order to see an impact. And at night, we have Australian home loans, not as important as job figures. Okay, before we head off, I see another last question here from Ryan. What are your thoughts about the impact of a country like South Africa, where SARB increased interest rates in 2 weeks, though with the weak economy and really bad fundamentals? While this will increase the strength of the currency, it will be short-lived due to bad fundamentals and credit defaults. Do we enter into hyperinflation, or is that only caused by printing more banknotes? I don't follow the South African economy very closely, but in general, we've seen a similar pattern in Russia. Despite the fall in oil prices, we had higher inflation in Russia because the ruble collapsed and import prices, they jumped. So the Central Bank of South Africa is trying to limit to sort of stabilize the currency in order to keep inflation in check. Of course, this hurts the local economy, so it's trying to find a balance. Okay, I don't think we'll reach any kind of hyperinflation in South Africa. They want to stabilize, they want to minimize capital outflow and keep import prices balanced. Okay, they don't have such a huge war chest of reserves like China, for example. I think there's also uncertainty there. We had the finance minister being replaced too often, so they're looking for some stability, and raising interest rates helps a bit, okay? But with the current tumble in commodity prices, even if they have more sound government policy and more sound central bank policy, it can have limited impact until things stabilize. Another question, odd jobs report good, why the currency not up due to risk on? It's risk off, yeah, because of worries, again, about the global economy. This overshadows the really good news from Australia. It's the third beat in a row. People were suspicious that this rise in jobs seen 2 months ago and 3 months ago was a statistical error, but now we know that it's more for real. Okay, I hope this answers all your questions. I'm very glad, and thank you very, very much, everybody, for all the great questions. It makes the show, of course, more interactive, more interesting, and more useful, I hope, for you guys. And that's it for today. I wish everybody a safe and successful trading day. I'll be here as usual tomorrow, and I'll be glad to answer more questions. Okay, so that's it for today. Thank you very much, and bye-bye.